Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar treks higher, carving out higher highs and higher lows as the US dollar slips to a fresh low of 107.45. The market bulls are now looking to test the area of 63.1530, which is where the 60-day simple moving average is. Investors now focus on Friday's US non-farm payrolls report, which is expected to show a slowdown of 154,000 jobs added in January, down from 256,000 in December, with the unemployment edging to 4.1%. Interest rates are expected to remain steady at the next Federal Reserve Open Market Committee, or the FOMC, meeting in March, with no immediate changes anticipated. However, there is much talk there could be a cut in June, while back home the Reserve Bank of Australia is expected to cut its official cash rate from 4.35% to 4.1% next week. So turning to the technicals, we are positive, and let's see if the market can get to that top side, but be a little bit cautious around that 60-day moving average, as we may find profit taking emerge above 63 cents, and therefore could see a pullback to 62 and reassess. The euro remains steady. As I mentioned, the dollar slipped to 107.45. With the attention on the non-farm payrolls, it's likely to get a little bit whippy. Nevertheless, break above 104.40.45 should engage further momentum to strengthen to 105 or maybe onto 106, where I've outlined here. Any pullback is likely to be limited, with support seen around 103.40.50. All cheers for the dollar yen as the market slips further and now beneath 152, since crushing the level of 153.35. It is viewed that the market has potential now to head on to 149.2060 area. Given the fact that the technicals are negative and also the ADX, it remains strong to a bear trend. Let's see if the downside can be reached in days, not weeks. Sterling, well, it's Super Thursday, with all eyes looking to the Bank of England's monetary policy meeting, where a cut of 25 base points is anticipated from 4.75 to 4.5%. In light of that, the technicals are still remaining somewhat strong, so I feel the pound is likely to rally on to the region of 126 to 127, with any pullback seen as possibly an opportunity to see demand return at 124.25.50. Turning to commodities, the precious yellow metal continues to carve out higher highs and higher lows, and reaching a new record high around 2,880 as safe haven demand returns due to the persistent concerns over the brewing US-China trade war, and along with that, comments from the Gaza Strip has also spurred haven demand. Nevertheless, with the dollar weakening as well, has added initial demand, and therefore looking now towards a region of 2,888 and maybe even further, with all eyes on the region of $3,000 an ounce. With the trend remaining somewhat strong, any pullback is likely to be limited. Wrapping up with oil, although we did see a very strong hammer come through, further supplies come back into the market, but still holding above the key area, which is seen around 70.70. I do feel that this probably could serve as a base, and therefore look for a rebound back to 73 as a potential target and reassess from there. But that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the day.